Hello, I'm Raul Elizalde with a quick take on the markets. Although September is quite often a dangerous month for stocks, this September has been so far pretty good for investors. The Dow is up more than 5% since September 1st. Now, we still have about 10 days left in September and then October to deal with, so we are still not out of the woods. But by and large, it seems unlikely that the Dow, for example, will give back much of its 50% gains since hitting a low point in March. So how are you doing as an investor in this market? And I want to address specifically those investors that by and large remained invested throughout the roller coaster of the last year or so. You rode the market down and probably lost a lot of money. But for whatever reason, you remained invested. Maybe you wanted to get out, but your financial advisor convinced you not to. Or you firmly believe that buy and hold is the right thing to do. Whatever the reason, the period from September 2008 through March 2009 was probably one of the worst times of your life. The Dow went from close to 12,000 to about 6,400. The value of your stocks went down by half. But you held on, and since March, your investments hopefully went up quite a bit. The Dow is now somewhere halfway, at around 9,800. You still are down, but you're a lot happier than just a few months ago. This is great. You got lucky. But this is not the best way to invest. Not having a process to cut down your losses on the way down is a serious shortcoming in managing your investment risk. But just as importantly, how much have you actually captured on the way up? Yes, the Dow and the S&P 500 went up 50–60% since the March bottom, but international stocks went up a lot more. 3 exchange-traded funds that we use at Path Financial, for example, developed Europe, Latin America, and Asia, went up between 90% and 100% in that period. REITs went up 110%. Did you have exposure to any of these assets? That is the true meaning of diversification and the key to successful investing. You know that you have to be exposed to different assets. You know that you need to diversify. But I cannot stress how important it is to manage that diversification. On the way down, holding on to your positions can be very dangerous. This is clear. But what sometimes investors do not realize is that on the way up, holding on to whatever assets you already have can also set you back. It is essential to find a combination of assets that can give your portfolio a strong possibility of growth. Eventually, your portfolio will experience some losses. If your investment process cannot generate strong returns when the market goes up, so that you can more than offset those inevitable losses, you might find it difficult to achieve your financial goals. For more information, please visit our website www.pathfinancial.net. I'm Raul Elizalde. Thanks for watching.